When people think of Rome's fall, they picture brutal invasions, defeated armies, or emperors dying in marble palaces. But empires don't just fall from outside attacks. The real decay often starts inside, and money is one of the most destructive forces. Rome didn't collapse solely from barbarian swords or corrupt leaders. Its downfall began with its currency failing. The lessons from Rome's financial collapse still matter today, especially when governments treat money like a tool to manipulate. For centuries, Rome's economy depended on the silver denarius. Minted over 2,000 years ago, it was nearly pure silver, trusted by soldiers, merchants, and citizens alike. The denarius wasn't just a coin. It was a symbol of trust and power, tightly linked to Rome itself. But empires are costly. Maintaining armies, building roads, and defending borders drained the treasury. By the 2nd century AD, Rome faced mounting expenses and declining tax income. To manage the shortfall, emperors repeatedly reduced the silver in coins. Augustus's denarius was 95% silver. By Caracalla's time, it dropped to about half. Later, under Gallienus, it contained less than 5% silver, bronze coated with silver. People noticed. Inflation surged. Prices skyrocketed. Soldiers demanded higher wages. Merchants refused debased coins, reverting to barter or gold. Confidence in money collapsed, and more cheap coins flooded markets, creating a destructive cycle seen in inflation crises throughout history. The crisis peaked during the 3rd century crisis. Rome suffered invasions, plagues, constant civil wars, and economic collapse for decades. Emperors turned over rapidly. Taxes collected worthless coins. Farmers abandoned lands. Trade broke down. Desperate, Emperor Diocletian issued price controls in 301 AD to fix costs. But laws couldn't save a broken currency. Black markets grew, and official commerce tanked. Eventually, Constantine replaced the denarius with the solidus, a gold coin with stable value, which lasted in the Eastern Empire for centuries. But the Western Empire was already beyond repair. Armies unfunded, trade crippled, and trust vanished. What does this teach us today? Money's collapse destroys empires. Rome fooled its people with coins that looked real, but weren't. Modern governments do the same with printing money, inflating debt, and controlling interest rates. The result is always the same. Ordinary people lose, wealth disappears, and trust fades. History repeats. Every major inflation crisis follows the pattern. Governments debase money to pay bills, elites protect wealth with real assets, and ordinary citizens bear the cost. Look at Weimar Germany in the 1920s. Massive debts after World War I led to printing marks, fueling hyperinflation. Bread prices soared astronomically, savings vanished, political extremism rose. Zimbabwe faced this in the 2000s. Printing money to cover economic troubles caused prices to double every day. Their currency collapsed, replaced by foreign money. Once again, the people suffered. Even in the U.S., the story continues. Nixon ended the gold-backed dollar in 1971, creating fiat currency based on trust. Since then, inflation quietly erodes purchasing power. A dollar today buys a fraction of what it did then. Governments hide inflation as growth, debt as investment, and rising markets as wealth, while silently stealing value from paychecks and coins, just like Rome's emperors. Today, this risk is global. Unlike Rome or national crises, the next collapse could impact the entire world. The poorest, dependent on fragile currencies, will suffer most. What should you take away? First, inflation isn't accidental. It's a quiet tax on your wealth. Second, real security comes from assets that hold value: land, skills, businesses, resources. Third, never assume financial stability lasts forever. History shows that systems often crumble slowly, then suddenly. When money fails, society unravels. Contracts break, markets shut, armies dissolve, trust disappears. Barbarians may close the gates, but the real danger is inside the treasury. Remember, history doesn't repeat, but ignoring it risks the same fate. If this changed how you see money and history, subscribe. History has the answers, and I'll help you uncover them.